start off with a random side note. I'd put in a maintenance request, and the only three options for the category were common areas like the pool, the gym, electrical, and then I don't know, something else random. But the maintenance request is for a door, and there were no categories for doors, so I just put electrical. So, anyways, I'm finishing my lunch because I don't know. I've been on this high protein, low carb kind of a diet, and I don't know. I'm feeling a lot more full lately. So here we are on the charts. Zazio. He just got food and he wants mine. 1 second. It's not even 7:30 yet. All right, so you may be wondering, actually, can you even see? You may be wondering why my screen isn't split. I'll tell you why it's not split. Because we don't have the, what is it? Yeah, we don't have the TapStep account anymore, which is crazy, right? All actually was over a month because I got rebilled for that eval. So it was over a month of consistently trading. What did we have? We had a couple of losses in that whole span, and the rest were just win after win after win. Doesn't mean every day was good, but somehow we avoided all those bad trades, made it a whole month. And then in one day of this, gone. One day. So, how do we avoid things like this? The reality is you can. I mean, how are you going to predict that the market's going to do this? You really can't. So, what I'm going to be focusing on in my stream is a lot less chatter and a little bit more, because for some of these, they were a lot of these that happened. What day is it? It's Wednesday. Here, like this all happened within seconds, right? This was at 17, and then at 24 we had a new brick form. So what is that? 7 seconds. This formed in 7 seconds. So unless you hit that button really fast, you weren't getting put in. And that was around 1. But let's look. Let's do our chart. Where is that? Where is my chart? I don't know. Okay, let's go. What? Google Docs. But I do have access. What? That's so random. Okay. All right, so let's do our charts. First, we will do this one. Let's do this one with the EMA filter. It's the easiest one to do. Okay, so between 10 and 12. Oops, 10. Okay. So between 10 and 12, there was one trade, and it was good. And there's about 6 minutes between when this formed and when that formed. So that was a good one. One trade, a single trade. That's all it took. It was one trade. And remember how yesterday I was like, oh, I can wait for tomorrow, or I can just do it now. See? And then there's that hindsight. Well, see, if you had waited just and came back at 10 o'clock, you would have had one good trade. See, that's all it takes. But of course, timing is everything. So Wednesday, we have 1 and 1. Now, for this, we're probably gonna have 0. No EMA. Let's look at what we got. Okay, so we had 1. Right, it's the same. It's the same one. So just a single one using the other one. So we'll put that here. Single trade. Oops, not 11. That would be crazy. Okay. Single trade. That's all it takes. So, Sazio. So, let's talk about learning opportunity, right? For a whole month, actually over a month, we had great opportunities. And I capitalized on each one a little bit here and there, not a lot, but I capitalized a little bit. Then funded account comes. Nothing changed. I wasn't extra nervous, extra scared, extra determined. I was just like, it's the same process. And instead, we got that, and I stayed a little bit longer because I was like, you know what? And not even that. Look at how far it went up. This one went up probably almost exactly to 8. It did, in fact. Well, maybe not. It didn't quite make it up there. It was okay. It didn't. It made it maybe 2 ticks away. 2 ticks away, but instead of running up, it decided to run down. And and the issue is not, oh, I did something wrong. No, I mean, this, as you can see, doesn't happen very often, if at all. Right? I mean, yes, it does happen, but it doesn't happen very often. As you can see, all today, did we see random choppiness like that? No. But the one time I get in, yes, just absolute choppy to the max. You can't make this stuff up. So I think for me, what I need to change, not the strategy, like I said, strategy is not changing, but how I approach the strategy is gonna change a bit. So instead of going in and effectively, what was I saying? Yeah, instead of going in and effectively, um, you know, oh, take a little bit off the top here, take a little bit off the, instead of doing that and taking a month to pass, we're not going to do that anymore. So basically, we're going to go in. If you end up getting a good one, great. If it ends up being a bad one, too bad, and gonna use a more aggressive approach to passing because I'm not taking essentially 2 months to pass only to get slammed with this nonsense, because let's talk about hindsight for a second. If I had passed, if I had, not taken my sweet time and actually passed in a couple of days, which I could have because there were good days. I mean, let's go back to the chart. This one. Um, this one would have been a break even, but 100%, 84%, and you only have to take a couple of those. So what I'm saying is there were a lot of good opportunities in here, and if I had passed in these first couple of days, I could have been capitalizing on things like this, things like that. That could have been okay, and then it started going downhill, but I could have been capitalizing on those things, and I didn't and couldn't because the market, like, again, and I said this a lot of times, but in the beginning at night, we were getting all this movement, and then all of a sudden, we started getting zeros and ones and threes. And the only reason why these numbers went up is because I started combining day and night. So I didn't have to keep the charts, multiple charts. So starting like on the 10th, I think, is when it starts combining days. The 10th or the 11th, I started combining the days. So the numbers will go up. But before that, they were just zeros, tons of zeros, one, two, three, not a lot of opportunity. And you have a day like this where you had 13. And so instead of instead of you know um instead of focusing on making 100 here, a couple hundred there, just squeaking by, my focus is gonna shift more on p- taking taking the setups, yes, but also capitalizing on them, right? Capitalizing on an opportunity instead of just letting it turn into something that's, oh, okay, that was that was really nothing, right? Um, so yeah, my strategy is gonna be more focusing on capitalizing. And also, let me fix this because this is one trade within 1 second. I can't count this because, oops, what was that number? Hold on, let's go back. I just forgot what it was. Why can't I go back? Hold on. Stop saving. What the heck? Okay, 6. It needs to say 5. I don't know why my computer is so slow. The reason why I have to change this is because if it's one trade within a second, there's no feasible possibility for you to take that trade. And so um I'm gonna count it as a non-trade. So it's gonna be, instead of 13, it's gonna be 12. And then instead of 9, it's gonna be 8. Because it's a non-trade. If it was within 1 second, it's a non-trade. Okay, I can remove those notes now. Okay, fixed that. Oh, yeah. Yeah, I mean, at face value, right? I'm just looking at this, over the course since October. Yeah, it's getting on 2 months. October, November, December. 2 months is 18,000 in wins, but then when you compare that to your 14,000 in losses, this hasn't gone anywhere. The only reason why this number is where it is because of a lot of a big wins to start out, and then it just kind of flattened over time, and it hasn't won and it hasn't lost. It's just kind of stayed stagnant. And I was keeping track here, but it was like, oh, you made 3,600, and then it just stayed stagnant. Stagnant. So it's very interesting, and this is why we have these numbers, is so that we can see what's actually happening. Because what's actually happening is, yeah, we had a profit. We had a jump in the first week. I think that was a weird week because it was right before, was it after the shutdown? It was after the shutdown happened, so there was a lot of movement. And then the shutdown continued for an extremely long period of time, and then everything just kind of went to a halt. And then we go into the holidays, and things aren't moving as quickly as they were in the evening. So then we combined the daytime, so we have a little bit more action going on. But the reality is just we stayed stagnant, mainly because the trading opportunities just weren't there for a long period of time. So we might start to see a little bit of growth, but I'm curious as to how much, really, how much. Because yeah, that's a lot. Now, we're still sitting at 71% over 126 trades, but again, um, extremely, when you consider the actual equity curve, it's really not that positive, you know, like the the percentage increase is basically not there. It was a jump and then it stayed flat. So um that's gonna be something that I'm gonna be working on trying to navigate because yeah, you know, I want to be able to grow an account and and yeah, are there going to be weird days? Yes, but I want to be able to pick a single setup that is good, that has a higher probability based off of X, Y, and Z instead of instead of, you know, just doing all of this extra stuff that's quite honestly, I don't know. Let's see. So yeah, I'm just gonna be studying this for a bit and we'll be back later. Later. Yeah. Another thought would be to pull trades from more time windows. I just reset it so that I can mimic real world conditions in which I do, let's see. So yeah, the other thought would be, now a lot of these are, I don't know, but yeah, the other thought would be to what was I saying? Yeah, the other thought would be, because I have this down to the 20, and I feel like that worked best for me. Let's see. I mean, it worked great for a month. I can't go changing the whole strategy because something that worked for a solid month just failed to work, and then it all came crashing down. And I've seen it happen myself, other people, you know. You have a winning streak for whatever long, and then a single losing streak, and it's all gone. Trying to think. Let's see. Because this is why I keep my numbers like this. And I have experimented with like 4, but that was just it was too much. Yeah. December 5th. Okay, one second. Yeah, this one I was getting hardly any movement at all. Um, and I think the problem with this, because I think I was doing 4 or 5. I think I was doing 5, and then I went down to get rid of that. I went down to 4, and then I went down to 2, because I wasn't getting, basically a single loss would it was hard to not to make it back, but it was hard because it wasn't moving enough to have a completion of a cycle. So for example, here, let's say you 26, you enter 1 and done, and that's 40, but then you're risking 80, right? To make 40, so you better be right, essentially. And then this one, okay, you're risking 80, make 40, you have to be right. So this one took out a lot of the, okay, so let's go to yesterday, where it was chopping around um within the same 40 ticks. You're not gonna see it here. Why? Because it was happening within a single candle. So all of that chopping around that happened yesterday was literally, this break was all in here. It all happened within here. And so you didn't get any entries. Actually, you would have gotten one entry here, um, which obviously would have been bad. But you would have gotten one entry, and then there would have been one here. But you would not have gotten, um, but yeah, you would not have gotten those 3 that happened back to back, were all contained within this one, and then this. And then that's where you might do something like make this more sensitive, so that um it's not picking up tiny little tweaks in the market. See what else. But yeah, that's just something else to consider if we want to limit exposure and therefore limit trading opportunities. Then we'd have to probably increase, right? Because that's one of the biggest things, right? Is if I'm overexposed in that I can go in and have three back-to-back trades in a row that lose, but on a smaller scale, that would have been a single losing trade. But then, you're increasing the risk, so then the reward has to be greater. Um, I don't know. A lot of things to consider as far as that. Um, what was I saying? Hmm. But yeah, might be something to just consider. Although then you get stuff like this. Yeah, then you get weird things like this that happen where it's like you still get this chop, right? But it's happening on a greater scale. So this is Monday around 10:30. So let's look at that same Monday at 10:30. Try to create a mental image and then we're gonna change it. Okay, to okay, Monday at 10:30. Go back. Whoa, went back too far. Okay. So that was probably this where we came up and then down and up and down and up and down and up and then finally down and then back up. But that's why there were multiple bricks that were single bricks. Green, red, green, red, green, probably a wick, then red, because it was happening on a much smaller scale. And so that would have put you with back to back losses if you had done four, but with two, it would have given you a win, a win, a win, a win, a loss, a win. So it increases your exposure, but it's also giving a lot more opportunities to make things back. Now, when you have tight consolidation, that's 20 ticks, then you're gonna get things like this, tight consolidation. But when you have wide consolidation, like 80 ticks, like we saw, then on the other chart, um, it's gonna look like this, but on a 40 tick chart instead of, something like this on a 20 tick chart. Um, and then even if like something like this, if you went down a notch, which we can't trade on that, it's too much. But oh, and also while I'm here, let me go back and check this. Okay, so yeah, and then if we go take it down to one, it makes it worse because then you've increased in exposure immensely, but also opportunities. It just depends. And let's go back to that fateful night, which was yesterday. Um, back here. So it was 17 right here. So those same moves that were single brick, single brick, single brick were this on a lower scale. You had this. Now that would have been a loss actually starting at 7:30. So starting at 7:30 right here. Okay, that was a non-trade. This one would have been a win potentially. Harder to say because if it's a 10 tick stop, then you're dealing with things like a lot of slippage happening. Um, and then this one would have been a loss, a win, a win, a win. So again, that's that same the same move that was happening on a 20 tick chart, on a 10 tick chart, it looks a lot smoother and something that could have been traded. But then you have to deal with things like this, where you might have a lot of bouncing around, and then it just becomes a lot harder to navigate um, something that's on such a low. Because let's go back to today. See, on the 20 tick, we were in the red. On the 10 tick, we're in the green. But yeah, I mean, the 10 tick really just opens up exposure immensely, because then you have all of these trading opportunities, and they could all be not so great. You don't know. Um, but this one, did that just happen? I don't. No, it didn't. Okay, but yeah, that's also something to consider looking into. But then again, if I want to look into it, I have to start charting. I have to I have to start a new spreadsheet for that. Based on a 10 tick, 40 tick. Um the other ones I'm doing are already 20 tick, but start a 10 tick, start a 40 tick, and start gathering data, right? Because I can see how the 10 tick would be useful in an instance where there's a lot of tight consolidation, but then a lot of instances where it isn't useful based on just a lot of price fluctuation, and then it just becomes a mess. I mean, this makes it look really good, but I mean, this all happened in a matter of a second. These three. Um, oops. But yeah, so I can see it. I think this would have to be more sensitive or less sensitive, so that it doesn't capture a ton of fluctuations, but you don't want it so um I don't know. And then this one, that was 1 second between, and then 2 seconds for that one. So like all of this happened within seconds, right? Are you clicking that button that fast? Probably not, you know. But see, that's all at 03. So let's look at the last. Let's look at 10 seconds. So this was at 1 o'clock, and all the way to 10 seconds is right about here. 10 seconds. Well, it's technically 12. This is 15 seconds. So in 15 seconds, we were down here and then we were here. So unless you're, you know, hovering over that button, you see that green, you're like, boom, I'm already in. There's no way you're getting in that, like you have already had to be in. So, I don't, and I'm gonna be honest, I don't know, right? I don't know which one to focus on. I really, like I said, I don't want to open myself up to a ton of exposure. right? Um because for me, I like to be able to get in, have a clear entry, clear exit, a clear expectation, and either it meets it or it doesn't, and it's completely non-emotional. Um, and so let's see, let's do a couple of math figures here. Let's just do math figures based on passing. So you can use 5 contracts, which means each contract is $50. So if you're risking a 40 ticks for $50, you're risking effectively 2,000. So basically, the entire account risked on a single trade. Entire account. Now, if it pays off and you make your 20 ticks, you are up 1,000, and that's great. But effectively, one the first trade, you're risking the entire account, right? Actually, basically all of them, right? Basically every trade you're risking the entire account. Um, Now that strategy is possible. Now, to limit exposure per se, let's say we only do a 10 tick chart. So 10, 50, well, um, all right. So that would mean we could do, oh, let me think. Okay. We could do 20, risk 20 times our standard 500. Well, that didn't even make any sense when I did it. Um, Hold up. Okay. If we do 5 contracts, risking $50 per tick, and let's say we're targeting, okay, let's say we're targeting, um, let's say we're gonna target, um, 20 ticks. Oops. So you're still targeting, 1,000, right? So that would be 2 bricks, but you could also risk 2 bricks as well instead of, so it becomes a true 1-to-1 versus, and I don't know, that's something to possibly consider, right? Something to consider. Because, like I said, it's easy to get in, get out, whatever. Um, and I'm just basing this, okay, so then there would be your 20, and then you'd be done. See, it's super simple, it's super easy. Um, and maybe that way, um, which way? Maybe this way I can target a true 1-to-1 ratio without, because that's one of my biggest things is I have a negative R to R. So that means whatever I risk, I also, um, whatever I'm risking, I'm also, I'm not gonna, I'm not gonna make it back, right? Like I'd have to do 2 trades just to make back what I lost, and then another additional trade to be in profit, right? So having a negative R is not great. It isn't great because then you're counting on a high win rate to offset the negative RR, but my win rate is right around that. It's in the 70s, 70%, but 67% is break even. So it is above. It's not like it's barely above, like by 0.1%, but it is just above what's required to break even. And that's why I think I've seen the account stay stagnant, or the equity curve stay stagnant, simply because of that. So I'm wondering, maybe, just maybe, if we improve our risk to reward ratio, we can then, I can then improve, um, improve what a loss does. But I don't know. That's just me. Let's go back to the other one. Oops. Yeah, having to go between these. Not fun. Okay. Wish there was like a button. See here, you don't have a single trade. I mean, this could have this would this no, it's not. It's not within the time frame. So this is a no. I mean, we have 13. I mean, we have 17 more minutes, but this is probably going to be a no trading kind of a day. Simply put, it's going to be a no trade day. But yeah, just I guess for me, it's like I see the options and the potential. And it's not like none of them work or all of them, they all have their moments, right? Where they work, and then certain conditions where they don't work so well, like for a tight, for a tight, um, what was I saying? Yeah, when we're hitting those support and resistance zones, you can see it clearly, but if you're getting stuck in that, you know, on a lower tick size, it might actually not look so bad and it's tradable. As you saw earlier, what took me out yesterday was actually a nice little hump, was nice little boop, 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 would have been fine. But on a higher, when you go up, then it messes it up. But then when you go even higher, there was no opportunity to enter at all, really. I mean, there's like one. So that's more to the point that there is no perfect number, right? There is no perfect number that's like, oh, this is the magic trading number and you have to utilize it. Otherwise, yeah, no. There's no such thing as the perfect number, or the perfect time frame with the perfect parameters. It doesn't exist, right? It's what works for you right now. Um, yeah, simply put, what works right now. And so yeah, it's not hard. Like nothing about it is hard. And yet when I lose, I feel like I need to go back to the drawing board, but that's not even the case, right? Because as you can see, that was easy. 5 contracts, 20 ticks, boom, $1,000, right? That's where you want to be, right? You want to pass the eval, pass the $2,000 buffer, and then be able to trade, or is it three? Anyways, pass the buffer, be able to trade with max, with full contracts, and be able to go in and within a couple of minutes make $1,000 and walk away. that's what you want to be able to do. But the reality is, what is the reality? The reality is it doesn't always work that way. The reality is that it's uh it's not so easy. 1 second, let me try something. Let's set up. Okay. Why does this look like this? I don't know. I'm gonna have to fix this. And what chart is this? Okay, same chart. See, this doesn't even look like anything happened, but yet something happened. Boom, boom. Seconds. Actually, I came here because that's the 5-minute chart. Brick. Okay. Go away, go away, go away. I need to fix this. Canvas. Ouch. That is clearly way too bright. Okay. Symbol. Oh, I don't want to change all the colors. Okay, let's just do one. That's really annoying. Okay. Oh, wait, and this should be on the 1 second. Okay, that's better. So yeah, maybe this will help me be able to compare and contrast the two um in real time without creating a chart for it just yet. Because if I could go in, right, and say, okay, actually, this doesn't have everything that I need on it. But if I could go in and say, okay, let's say, okay, we're in the red here, starting here. So all of this, let me get rid of this too. Sorry. Okay. So let's say all of this is red starting here. So then all of these, maybe you're like, okay, still red, still red, still red. This one, green, don't take it. This one, green, don't take it. Red. But like this completed at 6. So maybe you wouldn't know. There's some limitations, clearly. But something to consider, that is all. There's one. And tonight's just gonna be a zero night tonight. What's the verse of the day? Let's check. Hmm? Oh. Um. Oh. Oh, it's a Christmas verse. This one says, therefore the Lord himself will give you a sign. Behold, the virgin shall conceive and bear a son, and shall call his name Emmanuel. We're in that Christmas season. Lovely season. Um, I I don't I'm not really big on Christmas for some reason. Not I don't like it, it's just I don't decorate. I I don't do any of that stuff. I don't know. I'm not a Grinch, Scrooge, whatever, but there's a lot of corporateness surrounding Christmas. You know, the yes, the giving, but I mean, it's spending. And it's like, why do you have to wait for a specific time of year to show your love and appreciation? Why can't you do that at any time of the year when you can? I get it, but at the same time, I feel like it's there's a special word for it, but it's a very corporate holiday. Um, what happened? Yeah, it's a very corporate holiday, and it's not that I don't support goodwill and cheer. I just don't support, it's like whenever Christmas comes around after Halloween, you start getting those ads and commercials of, oh, why don't you step in and buy a Subaru at the new holiday event? And it's like, it's people use it as a gimmick to sell things. Oh, your kids want all these toys. You know what I got for Christmas? I got a calligraphy set one year because I really wanted a calligraphy set. My handwriting is garbage. You know how many times I used that calligraphy set? Like one time on Christmas Day, and then I never used it again. It was just like, oh, look at me, I have a calligraphy set, and it was just sitting there. Like, you buy all your kids all of this garbage and stuff that they don't need, and then it ends up in the trash. Like, I don't know. For me, I'm more about experiences for the holidays and less about physical gifts because it's like ugh, I don't know. To me, it's just this is artificial. Not that giving is artificial, but it's like if you were gonna get me that, why didn't you get me that at any other point in the year? And also, I don't need that thing, so yeah. Um, and and I think some of my best Christmases weren't ones that I got a great gift, but it was like I was on a trip. One Christmas, I spent New Year's in Athens and I spent Christmas in, is it Rome? Were we in Rome? Or we were in Naples, Rome. I don't remember. Honestly, don't. But yeah, I spent the Christmas, I think it was in Rome. Spent Christmas in Rome and then spent New Year's in Athens, Like to me, I'm all about, I guess for me, whoa. For me, I appreciate um crap. I appreciate experiences over um physical gifts of things that are just gonna go bad, A memories last, and gifts, I mean, they might last for a minute or two, I mean, unless it's useful, give me something that I can use, okay? Not something that you just look at and oh, that's pretty. And no, give me something I can use. Because I'm a practical gift giver, and I appreciate practical gifts, um, not these little things that it's like, I don't need that exactly. So, um, and then another Christmas, I was in, where was I? Oh yeah, I was in Mexico for like 10 days. And it's like, it wasn't about gifts and stuff. It's just experiencing Cancun and going to the beach and going exploring. I think on Christmas Day, we went on a boat. It was like a boat. It was like an excursion. Went to like a remote island, like where there's no people. It's like a research island. Kantoy, it's called. I don't know if that's how you pronounce it, but the island of Kantoy, and just spent the day at a remote island, and then went to a different island that was packed with people. That one was absolutely ridiculous, but you know, experiences, experiences, and then you got gifts, and I'm not big on the whole gifts thing. Just not. I'm not big on the whole gifts thing. I like I like experiences. I I do. So, experiences and practical gifts. But anyways, I like Christmas, but I don't love it. My house doesn't have a single Christmas decoration, and it's not going to, because then you put up all those decorations, you gotta take them down, and it's just like when I was helping my mom over Thanksgiving, like after Thanksgiving, she starts decorating for Christmas, and we had to put up a million Christmas lights, which normally I would probably be dying inside. I kind of was, but it was also just nice to be home and helping her because otherwise she'd do it herself. And so it was nice to help her, but at the same time, I did not want to be putting up Christmas lights because it's like they're just gonna sit there. They look nice. You're gonna kind of forget that they're there because they're sitting up there for a month, and then you gotta take them back down. I don't know. I don't get the hype of decorating. Maybe when I have kids that end up loving Christmas and they're excited, then maybe I'll like Christmas again. But as an adult, absolutely, absolutely not. So, anyways, we I still don't know. I still don't know um what is gonna be happening with this account. Not account, but I don't know what's gonna be happening with this yeah, I don't know what's gonna be happening with my trading, with the strategy. I don't know. I'm still gonna keep track of the numbers. Today it's nothing. I mean, right now it's nothing. So I don't know, but I do know that reducing this opens up for more opportunities and potential better risk to reward. However, it also opens up to a lot more risk if you get caught in things like that happen more frequently. Again, like I said, nothing wrong with the old strategy. The old strategy was fine. It just failed. Failed when I needed it the most. Anyways, all right. But yeah. One second. One day, one day, we'll be sitting on the other side saying, ah, finally, But until that day, we're just sitting on this side saying, why? Okay. But yeah, that's all I have for today. Is a bunch of rambling and still no real plan yet because yeah, don't got a plan, and that's okay. Um, just gonna keep experimenting with possibilities and possibilities. That was on Tuesday. Sorry, where was 10 o'clock? When did 10 o'clock happen? Here. Okay, so here was 10. Yeah, so at 10 there was a single trade right here that opened here and closed up here. Ah, I need to put this on here. Dang it, 1 second. Almost done, almost done. Updated. What do you mean? I'm gonna go fix this. Actually, first I have to do this. Settings. Okay, I left it. Close. Okay, I'm just making sure I left everything the same. Okay, it's better. Now I can see what happened at 10 o'clock. So 10 o'clock here. So this would have been and twee. Yeah, it doesn't look too bad, but that's one day. Anyways, that's all I have for today.